Opendoor stock closed Thursday's session firmly in the green, up 21 cents or just over 3% to finish the day at $7.03 per share. After several sessions of chop and volatility, today marked a steady, constructive advance that pushed the stock back above the $7 line, a level that has been both a battleground and a psychological anchor for weeks. The move came on the back of two major tailwinds. The first was confirmation of Mike Alfred's new position in the stock, 210,000 shares purchased at around $6.44, and the second was the release of the September housing data, which painted a far more positive picture of the housing market than many had expected. Together, those two developments helped stabilize sentiment and remind investors that despite the noise, Opendoor continues to be positioned at the crossroads of technology, housing, and opportunity. The housing data itself was the real headline today. September showed a modest but encouraging uptick in existing home sales and improved affordability metrics, thanks largely to lower mortgage rates and early signs that inventory is loosening up. For a company like Opendoor, which lives and dies by transaction volume, this kind of macro backdrop is gold. It doesn't need the market to boom, it just needs buyers and sellers to start moving again. Every sign that confidence is returning translates directly into improved margins, better liquidity, and higher throughput. And in a sense, that's exactly what we're seeing now, a market that's thawing, slowly but surely. The optimism reflected in today's data was enough to lift the entire real estate sector, but Opendoor stood out because it's one of the few pure plays on real estate liquidity. When housing activity ticks up, this stock tends to respond disproportionately. It's built to amplify those trends. Then you add in the Mike Alfred factor, and the story gets even stronger. His public confirmation of a large initial stake was a big sentiment driver. He's not just another influencer or retail trader. He's someone who has built and backed major companies in fintech and crypto, and who has a track record of seeing opportunities before they become mainstream. In his own words, he said he believes Opendoor has a massive opportunity to reshape the US real estate and mortgage market, and that he stands behind Nejatian, Eric Jackson, and the Open Army. The language there matters. He's talking about transformation, not speculation. When you put those two forces together, a respected investor stepping in at scale, and hard data showing improving fundamentals, you start to see why Thursday's session felt like a shift. Not a euphoric breakout, but the kind of quiet, measured rise that hints at accumulation beneath the surface. We also got some interesting insight from Eric Jackson this week. He mentioned that he recently spoke with someone from Opendoor in Los Angeles, and that the company is now officially in a quiet phase as it heads into earnings. That tells us two things. First, it confirms that the team is laser-focused right now. No distractions, no side chatter, just execution. Second, it reminds us that the next major communication from leadership will likely be the November 6th open house earnings event. Nejatian has been framing this as more than an earnings call. He wants it to be a conversation with investors, an opportunity to articulate how Opendoor is evolving from an iBuyer to an AI-driven housing platform. And that's the context for where we are right now. We've just cleared the first of three big catalysts, the housing data. The next is the Federal Reserve's rate decision on October 29th, and the final one is the earnings call on November 6th. Each of these events has the potential to reshape sentiment, either confirming that the recovery is real or forcing another period of consolidation. The Fed's upcoming decision will be particularly important. Markets are currently pricing in another dovish tone, possibly even a hint that additional cuts could be on the table if inflation continues easing. Lower long-term yields and cheaper mortgage rates would directly benefit Opendoor by boosting transaction activity. That's one of the biggest macro levers the company can't control but can absolutely benefit from. If Powell and the Fed sound calm and accommodative, it will add fuel to the idea that housing, and by extension, Opendoor, is turning the corner. So, today's bounce above $7 might seem modest, but it's actually the first sign that the narrative is stabilizing. For the first time in weeks, all three pillars of the story, the macro data, investor sentiment, and company fundamentals, are pointing in the same direction. There's also something quietly powerful about this quiet phase. It's easy to misinterpret silence as stagnation, but the truth is, companies often go dark right before they have something worth saying. In the past few months, we've watched Opendoor roll out new AI tools like Ernie and Chloe, streamline SaaS costs by millions, and integrate machine learning into its pricing systems. Those projects don't produce flashy headlines every day, but they're building the operational backbone for the next phase of growth. By the time we reach earnings in early November, we'll likely get the first real look at how these efficiencies are showing up in margins and throughput. It's also worth noting how well the leadership team has aligned around focus. Nejatian is clearly leading from the front, pragmatic, data-driven, and unafraid of detail. Eric Jackson's constant engagement with investors and analysts keeps the narrative alive even during quieter stretches. And now, with Mike Alfred joining the list of public supporters, the company's story has gained another layer of credibility. What we're seeing now feels like a transition period, from uncertainty to anticipation. The stock's rebound today wasn't speculative hype, it was a recognition that the pieces are starting to align. The housing data shows improvement. The Fed is on deck to potentially reinforce that momentum. And the company is quietly preparing for what could be one of its most watched earnings calls in years. Technically, today's move also matters. The stock had struggled to hold above 7 earlier this week, but today's close at $7.03 reclaims that line. That might seem like a small number, but psychologically it's a win. Each time Opendoor has defended this zone, the volume has shown signs of accumulation rather than distribution. In plain language, that means more people are buying dips than selling rallies, a classic sign of a base forming. The next level to watch is the mid-750s, where sellers have previously stepped in. If the stock can push through that range on stronger volume, perhaps following next week's Fed decision or early earnings anticipation, it could open the door for a retest of the $8 handle. That's not a prediction, just the natural rhythm of how accumulation phases tend to evolve. From a macro perspective, today's session fits into a broader pattern we've seen across growth and tech-adjacent names: gradual re-risking. Investors are beginning to dip back into names that were oversold during the mid-year tightening scare. Opendoor, with its high beta nature and exposure to housing, becomes one of the most interesting beneficiaries of that shift. But make no mistake, this is still a stock that requires patience. The real validation will come not from daily price action but from the next earnings print. Investors will want to see progress in profitability metrics, evidence of AI-driven cost savings, and most importantly, signals that transaction volume is recovering faster than expected. If those boxes are ticked, the current price could look cheap in hindsight. For now, the message remains steady: the turnaround is in motion, even if the headlines are quiet. The buyers are accumulating. The data is improving. The leadership team is executing. And the next two catalysts, the Fed's tone and the November 6th earnings, will determine how fast that momentum builds. So as we wrap up Thursday's aftermarket session, the big picture feels clearer than it has in weeks. The company has entered its quiet phase, the market has rediscovered some confidence, and long-term believers are adding to their positions. That combination rarely lasts unnoticed for long. In short, housing data up, confidence up, and Opendoor back above 7. The groundwork is being laid quietly, but the direction of travel is unmistakable. The calm before the catalysts might be over. What comes next could finally be the next leg in Opendoor's rebuilding story.